What's up, everybody? It's Dream Trades. I'm here to recap two really good option trades that I took last week, Friday, using a new strategy that I've been testing for the last couple weeks. These two trades net me about 60% in profit, which is one of the main reasons why I want to recap these, even though I took these trades a couple days ago. Yeah, I've been back testing the strategy for the last few weeks, and so far I've been doing okay with it. So yeah, with that being said, let's jump into the recap so I can show you the strategy and the two trades that I took. Okay, so I pulled up a screenshot of one of the first trades that I took for that day. Last week, Friday, it was, what's the month? August, yeah. So August 27th was the day I took that trade. These were 0 data expiration contracts, so those of you who trade options, you know that when they're close to expiring, they can give you a pretty good return on simple moves. So that's one of the reasons why I was able to get 60% on these. But anyways, let's get into the recap and the strategy. So what I've been trading, my strategy that I've been working on is trading with supply and demand zones rather than just using support and resistance lines. And the main reason I'm doing that is because I noticed that every now and then stocks tend to stop and hold specific support and resistance lines, but most of the time it's zones that are more important and honestly are more consistent too. And my previous strategy, what I was doing is I was trading breakouts and retests, or breakdown and retest, and I enter on that retest of the support or the new resistance that just been broken. So yeah, that's what I've been doing. But this time, what I'm looking to do is I'm buying in demand zones, and pretty much demand zones are areas where I know that there was consolidation and then there was a breakout afterwards, pretty much showing that there's a strong demand for the stock at that specific price point. And obviously it's not going to be one specific price, it's going to be a zone of prices. So an area of consolidation after a rally, or an area of consolidation that was there before a rally after a breakout. So technically it's still my old strategy where I'm doing breakouts and retests, but instead of that, I'm just trading demand zones and short-term recent demand zones. That way, I could do everything that, like I said before, take good entries and take really good safe entries, but I'm also not missing out on a lot of trades because I'm not waiting for them to come down to the support line. I'm more or less waiting for them to come down into that area where I know there's a demand or a supply, depending on which side that I'm taking, and entering trades in that zone. And once it breaks out of that zone, then I'm gonna say, all right, this trade is invalidated and I can exit. So yeah, that's the basis of the strategy. The first trade that I took was a loss, unfortunately. I had entered my full position right here, and on the breakout of this downtrend line, and there's this higher candle right here. Not this higher candle, this breakout candle right here. But this red zone that I have on the chart, that represents a supply zone in the new strategy that I'm working on, right? So, if I'm following the rules of that strategy, this right here was a bad trade. Yes, I could have said that it was an okay entry because it came up pre-market. There was previous rallies in the days before, so it already has strength. But because this is a supply zone, me entering the trade right there, which is basically just an area of resistance, like a zone of resistance, was not a good idea. And you can see it. My supply zone on the chart was perfect actually. It broke, and then it started consolidating at the very bottom with that just little doji candle, and then it tried to break and it couldn't, and got rejected, and it came all the way down. And that was a trade I lost about 40% on. I should have cut my loss a lot earlier, but I didn't, and honestly I can't tell you why. But I mean, it's okay, only because I was able to, just move on and take a really good entry afterwards. So, the idea is to always pick up pick up calls at the demand zone, because that's where there's going to be a strong area of support and where the price is most likely to turn around and rebound, or catch a reversal, things like that. Wherever there's a big area of demand where that people will most definitely buy, and sticking to only picking up calls in those areas once you get confirmation that there is demand there and that the price will actually turn around. So as soon as I exited right here, I saw that this first candle had a bottom. This was starting to show that there's some buyers picking up and actually buying shares in this area. This whole zone right here is a demand zone. I have the green line and then this pre-market support right here. I just consider this whole area demand zone. Typically what I do is I buy in the green, but I made a little exception this time. So yeah, you have the doji, the two dojis right here on the very top of the support area, and the demand zone is still there. So it tells me that people are actually coming in and picking up the stock, picking up shares. So I decided to re-enter after this first loss 1 minute after. I entered right here and I said, as soon as this breaks, I'm gonna get out. And honestly, I almost got shook out right here, but I was gonna wait for it to cross this low. And as you can see, it came up and I took it right into resistance, right back at where it had gotten rejected the last time. And so you see, I bought at this demand zone and it held, and then obviously because there's a high demand, it came back up into the supply and had a slight pullback. I could have, it could have kept going because it was holding the 9 EMA on the 5-minute chart. But once I saw this rejection right here on a previous supply, and I knew I just lost on a trade because of this rejection, I wasn't gonna hold. I was gonna come out and take my profit. So my entry was right here, and I'm scaling out on the way up. So I exit half whenever I feel like it, I should take some profit. So I exit half, exited again on the top right here, and I exited down here. And by the time I was all the way up here, that was a 60% profit on the contracts. Unfortunately, it wasn't my full position, so I didn't get 60% on the whole position in profit. But the last 1 or 2 contracts that I was holding gave me 60%. And this is the example. This is the chart on the 5-minute. So, like I said, I have that demand zone right here with the pre-market support, supporting that thesis that there's a demand or a strong area of support right here. And both of the 5 minutes were holding up on that support. So I entered at the very bottom, which was actually a really good entry. It was a really good entry. And then this 5-minute chart, this 5-minute candle held up. You can see on the next 5 minute, we got that first move up with higher volume than the last 2 previous candles. So honestly, I could have kept holding, but just because of the fact that there was that rejection and I took a loss of 4, I just want to make up my loss and walk out with some profits. So that's what I did, and honestly, I'm happy with how that trade went. And basically, the next trade that I took was exactly the same. So the next trade I took was on SPY, and again, just like I said with NVIDIA, the stock was rallying, and there was a whole lot of strength. For this specific stock, there was a whole lot of strength today, because it opened down here, and then there was just this huge surge, and I can't tell you why. There wasn't really any news backing it or anything. But I said, I want to get in on the next pullback down to a demand zone that I identified. I had previously had a 448, or I guess you could just call that 449, a 449 resistance level right here, Also, it's also shown right here. And when the stock came up this is the 1 minute chart. When the stock came up, it started consolidating around this area on the 448, so like probably 448.9. So I said this has to be an area of demand, or an area where there is a support. So obviously what I did is once I saw that there was a supply forming, an area of supply or resistance, because this was the high of day, and this was actually also on all-time highs. It came down afterwards, and I said I want to take it at the next support, or the next best place I can enter. And honestly, what I would have used to have done is I probably would have tried to get it all the way down here, but because I'm starting to use supply and demand zones instead, it allowed me to actually catch this trade and catch the move back up into high of day, or at the supply zone. So yeah, I identified that demand zone, and then I saw that there was also a downtrend forming, a clear downtrend. So it's just the fact that I had those multiple areas of confirmation. I had the strong rally. You can see that on the 5 minute chart with the higher volume. You can see that right here. And then the rejection off of high of day formed the supply, and then formed the downtrend. And you can see down here, if I zoom in, when it came down to supply, the volume died off. And honestly, I think that's the main indicator that I need to start looking for when I'm trading the strategy, is volume dying off once it reaches demand, because it shows that the sellers aren't nearly as strong as they used to be, and that pressure isn't there. So honestly, I entered a little bit early just because I was so confident in all of these facts, because there was multiple confirmation, and just the fact that the stock had pushed up so high for apparently no reason with such high volume. So it showed me that it wasn't just people trading, it was institutions in it too. So entered right here once I saw that there was that low volume coming down, and next candle it broke, and it broke out. I sold half at the resistance, sold half. I sold a little bit more on the break of this pivot, because you always want to sell into strength, and that's something I'm still working on as a trader. Sold on the break of this, and then I sold up here again, and then my last contract at higher day, that's where I got out completely, and again I was up about 60%. So yeah, I took 2 really good trades using that strategy, and I just decided I should share that with you guys today. So yeah, with that being said, that's the whole recap. If you found this video helpful, make sure you guys like and subscribe, and I'll be seeing you guys in the next video that I